Hello and welcome to Profiles in Risk. This is your host, Tony Cañas, and today I have with me Carl Ziade.
Correct.
Awesome. And Jean-Pierre Vertil.
Vertil.
Jean-Pierre Vertil. Perfect. So they are co-founders of Gaya. Did I get that right? Gaya. Okay, awesome. And I will address the elephant in the room before we get started. For those watching it on the YouTube channel, I have a giant patch on my neck, and it is not a nicotine patch. My story is that I got bit by a vampire, and that's my story, and I'm sticking to it. Or it could be just my neck was hurting this morning, and I put on an icy hot patch, and I was going to take it off just before recording, but it turns out like it's really stuck in there. So I'm going to have to like shower to take it off. Like it was hurting trying to take it off. So my story is I got attacked by a vampire. So anyway, for those listening,
I hope you have some insurance against vampires.
InsurTechs listening out there, we need vampire insurance. I have not ran. There is such a thing as UFO insurance. That is a reality. There is somebody out there selling that. I really wonder if they've ever paid a claim, but they do sell it. I'm guessing not in the States, but it does exist.
I wonder if they even have customers.
You know what? They probably do.
No.
They probably do, but probably not. Like the U.S. is too heavily regulated for that. But I really do wonder if they've ever paid a claim. But I do know that it's a real thing. So anyway, vampire insurance coming soon, not from insurance nerds. Okay, so now that we got that out of the way, and that anybody listening on the audio only feed is thoroughly confused, click on the YouTube link, people. It's there. It's there on the description. Okay, so Carl and Jean-Pierre, we always give the guests the chance of giving the elevator pitch. So what is Gaya?
Yeah, so Gaya is all about expanding the financial offering of insurance agencies and starting with car loan refinancing. Today, a customer comes to an insurance agent to get a car insurance for their cars, and they equip them with a lot of details about themselves, their cars, the lien holder on the car, and whatnot. And most often than not, these same customers have a car loan that has been originated at the dealerships. The dealership originated is not ideal given that it doesn't account for credit migration of people, meaning if you bought the car, started financing it 6 months in, you probably increase your credit score. No one calls you in to refinance you to decrease your rates. At the same time, the dealerships have an incentive to choose the loan that is not necessarily ideal for you or the cheapest for you. And so we're offering the tools so that any insurance broker can offer a new line of business to their existing clients, adding value to them, lowering their aggregate car monthly payments, and just like creating additional value for their end clients.
Okay. So I know I've never worked in the finance side. I've read a lot about finance. I have an MBA. I've read a lot about personal finance. I'm a Dave Ramsey fan. I don't follow him 100%, but I am a fan of his teachings. His YouTube channel is a million times bigger than mine. So anyway,
you'll get there.
Let's go over it kind of step by. Thank you. Let's go over it step by step. Okay. So expanding the financial offerings of insurance agencies. Okay, so that's okay. So agencies historically sell insurance, get paid a commission depending on the type of insurance they sell. They might charge a broker fee if the commission doesn't make sense for that type of business. But historically, I don't think they play in the finance piece. Okay, but okay, refinancing. Okay, so refinancing is very big when the rates are good. It's very big for homes, right? Right now, the rates are not good, especially not compared to record low rates we had a year ago. So right now refinancing is hard. But car refinancing, I've never heard of car refinancing. So I'm curious, is car refinancing a normal thing in the economy, or is this like a whole new offering? Let's start there.
Yeah, happy to take this one. So car refinancing is definitely normal. It's something that exists. It
Okay.
just happens that the volume of car refinancing is not as high as that of home refinancing or mortgage refinancing. So to give you some numbers, about 60% of mortgage application every year or refinancing applications, but for car refinancing, it's only 5%. So only
Oh, okay, okay, okay.
5% of car loans issued every year or refinancing applications. So that's
Oh,
part of the problem, for sure. So there is not the awareness that should exist. And we believe that right now, the way it's being done, most of the players who enable car loan refinancing, they go direct to the consumer. So what they'll do is they'll send a direct mail to your house, or maybe they'll target you via ads on social media or through consumer apps. For example, maybe SoFi may be able to do it, or Credit Karma. So these kind of apps, they can target the customer directly. And given the fact that it's not as well known, it's hard for the customer to get to the finish line. So that's part of the problem. So the lack
okay,
of awareness.
okay.
The second one is, yeah. And the other issue is that the way they target you by bombarding you with all those different platforms or direct mailers, people get desensitized over time, right? So it's not very convincing. So that's
Okay.
also for sure.
Okay. So quick pause. Okay. So car refinancing, is it one of those things where, like, I'm one of the 5% of people that thinks, oh, hey, my credit has improved, so I'm gonna refinance my car. And you go and fill out a website or an app, and then you get calls by 150 different providers. Is that kind of how it works? And then like you're like never ever again.
Basically, yeah. So, well, first of all, one more thing I should have mentioned earlier is that whenever you purchase a car, the experience of buying the car itself can be pretty dreadful, right?
Horrible, horrific.
Exactly.
Yeah.
So you leave the car dealership with a pretty sorry taste in your mouth about what the financing process was like. So most people, they don't even think about anything financing related to their car once they leave the car dealership, because they tell themselves, hey,
They
you know
never want
what?
to deal with it again.
I don't want to do it ever again. I don't want to deal with this.
Okay,
So that's also part of the issue. Not many people even want to go back into dealing with the car financing because it's been such a dreadful process, and that prevents them from actually taking the initiative to look up what's accessible for financing options.
Okay, and I want to talk a little bit about the dealer financing process, right? So not only is buying a car like stupidly painful in this country, but also the dealer has, in my understanding, I've never worked at a car dealership. I interviewed once and I didn't get it. Not only did I not get it, this is a funny story. I was an international student, so I could only work with my H-1B visa in a job directly related to my degree in management information systems. So I emailed Iowa State University School of the International Student Services, and I said, hey, I'm very tired of my transportation job. I have an interview for a car sales job. Am I able to work a car sales job with my degree? And they replied, and they literally said, I might still have this email. They literally said, maybe, but what would your mother say? I did interview. I did not get the job. Okay. Anyway, so at the dealership, the dealership is not a fiduciary. They have no responsibility at all of doing the right thing for you. They can very much they can very much try to sell you expensive financing and pay themselves extra, basically, right? In fact, I have walked into a dealership with the Capital One blank check, like a pre-approved loan, basically, and they don't know what my limit is. They don't know, like the dealership doesn't know what my APR is, but theoretically, I should be able to negotiate like a cash buyer, right? And they like don't want to sell you the car if you want to pay cash. Like they do their best to push you hard towards their own financing because that's where they make a lot of money, right? So yeah, the dealership has the wrong incentives. So I just wanted to like make sure that the audience knew that. Okay, so now if I'm an insurance broker, which I have never been, but if I'm an insurance broker, I do a lot of personal lines. Somebody walks in with home and auto, whatever. I do I need another license to be able to offer them car financing?
With what we built today, it's merely like the activities that you will be doing will be just around providing the lead, although it's very well embedded within your workflows, meaning if your customer, you can layer it in when the customer is renewing, if the customer is lapsing on their payments, you can pitch it in, customer is walking in. So it's a very light set of activities that they have to do on the behalf of their customer to determine whether they have submitted an application for refinancing or not, and then a loan officer will take over that lead and fulfill the entire longer, although not very long, but slightly longer credit application. So,
okay, so
it's somehow like we're letting the insurance broker qualify the lead that we're sending to a loan officer that would have the corresponding all banking relationships.
okay, so something very, very similar to what currently happens for life insurance, where like I do PNC, I don't do life, but I do have a life guy. Let me get the basic information from you, and I'll hand you over to a life guy.
Exactly.
So is it 10 minutes worth of work? Is it 15 minutes worth of work? Is it 2 minutes worth of work?
It's less than a minute.
Less than a minute. Okay.
Yeah.
So I'm already getting the information in order to get you your car insurance. There's 3 extra questions.
Yeah.
Exactly. Okay, cool. Very cool.
And not only that, like this is, you're talking about a customer coming in or on the phone, you're quoting them. But we're here looking at our technology allows an insurance agency to look at their existing book of business, the thousands of customers they have, and we would prioritize for them which ones they should call because they have a lien holder that we consider expensive, or we were able to determine that their customers have improved on their credit score, or were able to determine that their customers are slightly financially stressed at this stage and might want to look at a refinancing to lower their monthly car payments, like different variables that we look at to determine whether an existing insured customer might benefit from a refinancing of their car loans. So like these are the 2, I guess, value props that we offer for new customer, the less than a minute questionnaire, and then for the existing customers, a prioritization that would allow the insurance agent to go through a subset instead of all the list of customers and calling them and asking them if they want to refund.
So let's talk about the whole credit migration thing. I had never heard the term credit migration. Is this credit migration? Is this a common thing in the finance world or in the fintech world? Or is this a whole new concept that you guys are bringing into the space?
Okay, so the term is something that exists, and what it basically means is, if you've been doing better financially, if your credit profile has improved over time, then you should also be reaping the benefits. So, for example, you got a loan when your credit score was subpar, then it's improved over time. Then normally what should happen is the bank that gives you the existing loan, they should also be giving you a favorable interest rate. But that simply doesn't happen.
Yeah, right.
That's what it should be in a perfect world, right? But it doesn't happen because the bank would be losing money, obviously.
Yeah, it's so basically it's what economics would predict would happen.
For sure.
But yeah, it's not what happens because people don't have perfect information. So I don't know the exact time as the consumer. I know I've been working on improving my credit, or maybe I just got a better job and my credit has improved, right? But I don't know exactly at what time it actually makes sense to go through the process of. So there's an information asymmetry.
For sure. Yeah, definitely. So yeah, so the consumer also is not equipped to know when is the right time to do it. They're not sure if they should wait a little and see an even greater improvement. But then at the same time, if you wait too long, your core values may decrease. So there's a lot that's unknown to the customer. And our platform essentially enables the insurance agent to know, hey, now is the stellar time to reach out to this particular person. So a lot of that information asymmetry, so at least a good chunk of it, is being solved by what we're offering to insurance agents. So we're basically empowering them so that they really know who to target in the first place, who is worth targeting right now versus next month or in a couple of weeks from now.
Okay. Okay. Is there, so let's talk money. Is there a cost for my agency or for me as an agent to start using to start using Gaia? How does that work?
At the moment, we're a software that is for free, meaning the agent will have to pay nothing for using the software and we will prioritize their existing book of business when it comes to existing clients eligible for a refi and for high savings potential on their monthly car loan payments. We're still at an early stage whereby our hypothesis and value proposition are put to test. We have a lot of pilots that are currently undergoing that would allow us to determine what is the exact value being created. And then with time, we will reflect further on how to capture some of the value ourselves and how. Is it going to be a commission per lead, or is it going to be a SaaS fee that we layer in at the agency level, a seat-based pricing? We will get to experiment with that in due time. For now, we're focused on making sure that this channel have a nice conversion rate, lower CAC than going directly to consumer, and also providing additional benefits from a retention perspective to the insurance agencies and like higher satisfaction for the end clients. So this is, I guess, the more focus for now. Like economics, we worry about them later. And while it's free, we're paying for the insurance agent for every lead that gets refinanced. And also we're paying them for every lead that is just submitted. So we have like a submission fee and a lead fee.
Can I ask how much I get paid for each lead?
For sure. You want to share, Jean-Pierre?
Yeah. So for every submission, you get $20. And if the submission is successful, as in they go through the refinancing process and it's a successful refinancing, then you get an additional 100. So it's basically about 120, which is somewhat equivalent to what you would get for, an insurance policy for a period.
So if I am a personal lines focused agent, and I quote, I'm making shit up here, I really don't know, I quote 200 people a week, right? Like I have no idea what's normal because I've never been an agent.
That's a lot.
I quote 200 people a week, right? And
you're a super you're a superstar agent.
Okay, so what is normal? How many people does a good personalized agent quote a week? 50?
Okay, let's go with that. Yes.
Thank you for correcting me. I have no idea. So I quote 50 people a week that have a car, right? And what percentage of them are likely to be a lead for you guys? Do we have an idea? What, 20%, 15%? We really have no idea.
Yeah, so right now what we've seen is that those who go direct to consumer, so their success rate is around 3 and 5%. So we're really hoping that by having an insurance agent with someone that you have an existing relationship with, we're hoping that we'll have even higher multiples. So we're not exactly sure what that conversion will be, but we're betting on the relationship that exists between the insurance agent and their client.
Okay.
In order to make it a warmer lead and lead to our conversion.
Yeah. So if I quote 50 people a week, let's call it 10% of those are a lead. That's an extra $100 a week of just free money for doing a minute of work. And then if some of those become $100, that could be $200 or $300 a week of
Yeah.
just free money for doing what I already do.
So the lead by lead, like we were saying, a converting lead, meaning a lead that refinance. Because like if you look at the market today, more than 50% of consumers have a car loan interest rate that is higher than they should be paying for. And so if with this mindset, 50% of the codes can be actually eligible to lower their car loan payments. Now, from these 50%, what Jean-Pierre was mentioning is that, let's say, 20% of those, so meaning we go down to 10%, will actually fully submit and refinance. So I feel like there is a lot to be made from a submission perspective and even more to be made from a refinancing perspective.
Okay. And did I understand correctly that at some point, I don't know if it already does that, but at some point your software will be able to look at my whole book and predict who can use a refi, not just new quotes? Are you already doing that, or is that in process?
Yeah.
It's like,
it's like
we currently do it. So we use a proxy data points. We don't do any credit pools or anything that's intrusive. And we're able to give you an estimation of who would be able to benefit mostly from refinancing.
Okay, so if I am a State Farm agent, well, they're exclusive, so they might not be able to.
Oh, very exclusive.
If I'm a
farmer,
personal lines agent who has been doing this for a long time, and I have a book of 10,000 customers. Again, I'm making numbers up. I've never been an agent. Literally, like for free, I can plug your stuff, give you access to my agency management system in a secure way, I'm assuming. By the way, insurance nerds and profit risk takes no responsibility if this is not secure. Make sure your cyber insurance is in place. Okay, so
we might send vampires though.
Exactly. Anyway, so I can literally just give you access to my agency management system in a secure way, and you give me a list of hey, the following 500 customers probably can benefit from a refi, and then I can literally like have my kid in the summer, like for like $10 an hour, call them.
That is great.
Yeah. Okay, so I can mine my book.
Yeah.
I really like that analogy of having your kid do it. First of all, because it's really simple. And we've actually spoken to a few insurance agents who've told us, you know, I could actually have my secretary just call those people in their downtime.
No, there's a million ways to do it. Like you can probably
Yeah.
outsource that to the Philippines. Like Agency VA can probably help you with that, or any of the 2 or 3 companies that do outsourcing for insurance agents.
Yeah, there is a fine line here because our bet is that the warmth of the relationship between the agent and their customer can lead to higher conversion. So if the agency model is one that relies on just selling and then servicing and doing everything else outsourced to the Philippines, it means that your customer only like you were just the front end sales guy, and they never really talk to you then. So like it's a fine balance, but it's also worth experimenting. At this stage, we're all about seeing what works, which category will work, which geography will work, which cars will work. So there's a ton of stuff to learn.
I love that we have you on the podcast so early, and actually like this is really cool because like Carl and me, we've had a couple of conversations before we recorded. So I like I've seen this kind of evolve, and it's been really cool to see it. But you guys are really early on. So let me ask you, who are not with name and last name, but what types of agencies are the ones that you would be really excited to like run a proof of concept with, or what type of organizations would be a great fit to try it out with?
Yeah, so the ones we've been focusing on so far are either independent agencies, or we've been also working with agencies of the types that have, or a franchise model where they have in the range of 50 to 200 locations. So these are the ones that we're really hoping that we can continue experimenting with. And that's just because, you know, the big guys, so all the captives, so the Geico and the State Farms, those were super long sales cycles. And these are very big giants. So we want to get there eventually. But for now, we're extremely excited to work with the guys who would be much more receptive to us, which are the independent agencies, basically the non-captives. Yeah.
Okay. Okay. What else? What other? So for example, are you currently hiring? Is there a talent pool that we can help you reach through the podcast, or are there carrier partnerships that would be helpful, or other organizations that are not agencies?
Yeah, I guess we do have already a running pilot with an agency that is at the same time a carrier, meaning they carry and also they sell for others. And we do have a partnership with another one that sells both like insurance and other stuff in relation to your financial life. And we have also like across the spectrum from non-standard to standard experiments running across the credit spectrum and across the driver's behavior and rating. I guess like what we are in need now, we're surely hiring and expanding our team from a development, design, and marketing perspective and partnership perspective. And I'm going to do a shout out for you, Tony. I really like this initiative you put together, which is the aggregating all the list of insurtech companies that had to lay off in this downturn. That's very helpful to us as we get to reach out to people who are very, like, be it from the marketing, software design perspective, geared towards insurance and familiar with the terminology and the industry dynamic, because it is a very peculiar industry and very messy. And so having someone who already understands the blueprint can be very helpful. So shout out to you on this one. And
thank you.
From a partnership perspective, we are like now focused on executing on the pilots that we have structured. And we're already part of an accelerator now. As you said, we're early stage, and we have a demo day coming soon, in late October. And I guess
accelerator, if you are able to tell us.
Yeah, it's called PIR VC. They're based in Palo Alto. Yeah.
Okay.
So we've been working with them for a few weeks now. And then we'll be, thank you. It's been great working with them. And we'll be having our demo day in October. So that's when we'll be thinking of fundraising even more seriously. Yeah.
Yeah, PIR VC, like they really backed InsurTech and FinTech folks that made it very well. Nova Credit, Cardless, Young Alfred, and many others. And it's a really great environment to experiment wildly. That's to put it simply.
Awesome.
And so,
awesome.
Yeah, around demo day time, the objective would be we're raising for this seed round, and we want to scale it to these carriers and agencies, and we would be like going aggressively after that. For now, like we're very focused on the pilots, but we're open. If anyone wants to reach out to us, we're open to start the conversation from now to kind of have something on the books ready, a pipeline on the book ready, and the earliest the better, right? To have a way to get going.
Yeah.
Awesome.
Something else I can add is also looking at different AMSs, so agency management softwares. So there's a few that we're in very advanced conversations with. One of them we're deep in the integrations. So if there's any innovative AMS provider who'd like to potentially talk to us or partner with us, we're very open to that kind of partnership in the moment.
Perfect. So hey, Vertifor, hey, Applied, if you guys listen to us, you probably don't, because we spend a lot more time bad mouthing you than anything else when it comes to because maybe Hawksoft. If you guys are listening, why not? Why not? Okay, awesome. Thank you for
this is not to mention. Yeah. This is not to mention that we're already like in a very advanced conversations with a subset of those you mentioned. And so like we're very excited to get going, and like we're here betting that the insurance agent role is evolving with time. There's a lot of technologies I mean, the insurtech world, when it started, was all about disintermediating the middleman, and we're all about the middleman here. We're all about giving further tools to the middleman to participate within their communities and serve their communities in a better way. Finance is not just like buying a ticket to go from a place to another. It's a very complicated thing. You need advice, and you need someone who got your back in the moment of doubt. And so, given that there's a lot of technologies today helping the insurance agent and reducing the amount of efforts they have to put in place to service or sell or maintain or collect or whatever, we feel like the insurance agent role is evolving way beyond providing insurance and into providing a cohesive set of financial advice.
Love it.
Including insurance across the board, like specializing with one product. Like, let's say you're a healthcare insurance, you would specialize and you would have this backlog of referrals or like qualified referrals that you would be sending left and right to still help the people within your community. In our case, we focus on this car insurance agent, the persona who is specialized in car insurance, and we're giving them financial tools, starting with car loan refinancing, but evolving in the future to car loan financing, potentially, meaning the customer, as they are buying a new car, they would call the agent and ask them for a quote on this new car before they buy it, before they engage in committing to an insurance payment per month for this new car. Why not also offer them a pre-approved financing with one of the partners that Gaya powers? And a range of other products that we're looking at. So yeah, all hands are on deck, and please feel free to reach out to us whenever you can. We can leave our contacts in the bio, I guess.
Yeah. When it goes live, I will tag both of you on LinkedIn, and I will also tag the company on LinkedIn. So it should be pretty easy to get a hold of you guys. The company website is Gaya Fi. So GAYAFI.com. So yeah, pretty easy to get a hold of you guys. By the way, listeners, when you reach out to Carl or to Jean-Pierre, tell them Tony sent you. Tell them that you heard them on Profiles in Risk. And I do want to clarify the what's it called, the Google spreadsheets with the laid off people, and those have been amazing. And they were broker Brett and the deal dog Rolando Arredondo were the ones that came up with the idea, and the ones that have spent the time to build it. All I did was say yes, that's cool with me, and yeah, super awesome. Yeah,
it's a nice community. You have a nice community, man.
It's such an awesome community. Yeah, I don't advertise nearly enough. I really need to get better at it. For the listeners and founders and future founders, and if you live within the insurance or insurtech space at all, check out the Insurance Nerd Slack channel. Anybody can join insuranceslack.com. It is true, and it's free. It is a really great community. Now, we use the free version of Slack, so it has some restrictions, but it is a really cool community. And by the way, for anybody, for the listeners also, if you made it this far in, yeah, the spreadsheet with the laid off people, you're free to use it. You're free to post jobs in the jobs channel, and I think the spreadsheet has an area for jobs. If you need a little more help than that in finding talent, that's what I do in my day job. Give me a call, send me an email. Happy to assist with the search. Guys, looking forward to see what you guys do, how this grows. Looking forward to have you back in a year or two, and see how things have changed. Hopefully, I will see you at InsurTech Connect in 50 days from now.
Yeah, awesome.
Thank you so much for having us.
Thank you very much for your time.